Welcome to the deep dive, where we sift through your articles, research, and notes to pull out those essential nuggets of knowledge and insight. Today, we're plunging into the world of precious metals, specifically looking at a company making a truly audacious bet on silver. In a world absolutely hungry for silver to power the green energy transition, Endeavour Silver is sinking hundreds of millions of dollars into a plan to more than double its production. But here's the kicker. Their operations are heavily concentrated in a country that's, well, tightening its grip on miners. So the big question we're unpacking today is this. Is Endeavour Silver's move a masterstroke of strategic growth, or is it a high-stakes gamble teetering on the edge of backfiring? We're going to dive deep to find out.
Right. Our mission in this deep dive is to dissect Endeavour Silver Corp, trading as EXK on the NYSE and EDR on the TSX. We're drawing on all publicly available information as of July 28, 2025, with the stock closing at $5.10 on July 25th. Our objective is to build a comprehensive picture of its business, management, financials, and risks, all through the lens of deep, fundamental research.
And to give you the clearest picture, we've structured this deep dive into two main parts. In part one, we'll tackle chapters 1 through 3. That's business analysis, management evaluation, and financial analysis. Then in part 2, we'll move on to chapters 4 through 7, delving into market sentiment, ownership structure, risk assessment, and finally, our conclusion. Before we really dig in, just a quick note, if you find this kind of in-depth analysis valuable, please consider liking and subscribing to the Stock Analytics AI YouTube channel. Members, for just $41.99 a month, get priority deep dives on specific tickers. And here's the exciting part. Over the next few months, we're covering all of the S&P 500 stocks. Members get exclusive priority access to those deep dives. And if you just want a one-off deep dive on a specific stock, drop us a super thanks.
All right, let's unpack this big bet. We're starting with Chapter 1, Business Analysis.
Okay, so Endeavour Silver operates what's called a full life cycle mining model. This means they're involved right from the very beginning, evaluating properties, acquiring them all the way through exploration, development, and then, the actual exploitation of silver and gold. Their strategy for growth is essentially twofold. Organic, so exploring existing sites, and inorganic, meaning strategic acquisitions.
And their primary revenue stream, that comes from selling precious metals, right? Usually doré bars or concentrates.
Exactly. Doré bars or metal concentrate.
What's really interesting here is their strong focus on silver. Historically, over half their revenue comes directly from silver, which means they offer a very direct investment vehicle, giving you, the investor, pretty strong leverage to the price of silver itself.
Yeah, and the company really emphasizes silver's critical role, like far beyond just being a monetary metal. Its unique properties, it's the most electrically conductive element, most reflective, make it absolutely indispensable for modern life. Think about its applications. Renewable energy, especially photovoltaic solar panels. That's huge. Then there's electrification EVs, for example, need about twice as much silver as traditional cars. Plus, technology, it's in nearly every modern electronic device, semiconductors, 5G networks, in even healthcare, for its antimicrobial properties and medical equipment and water purification. It's everywhere.
So with all that demand, what does it mean for Endeavor's current market position? Where do they stand now?
Well, as of mid-2025, they're what you'd call a mid-tier producer. They churned out about 7.6 million silver equivalent ounces in 2024.
Okay, mid-tier now. But their goal?
That's ambitious.
Incredibly ambitious.
To become a premier senior silver producer, targeting 20 million silver equivalent ounces annually by 2026.
Wow, 20 million, that's a 150% production increase. That would dramatically change their scale. That really sounds like that masterstroke potential we mentioned.
It absolutely does. And this aggressive expansion, it's primarily driven by two key projects. First, the nearly complete Terronera project in Mexico. Second, the recent acquisition of the Colpa mine in Peru. This brings us right to their main value proposition. Direct, leveraged exposure to the silver market, combined with a very clear, very visible growth path.
So for anyone bullish on silver.
Exactly. For silver bulls, EXK offers a much more focused investment than, say, a diversified conglomerate. Their financial performance is going to be highly sensitive to silver prices. They openly claim to have one of the strongest growth profiles in their silver peer group.
That's a bold claim, and it ties right into the industry itself. What's fascinating here is how the broader silver mining industry is currently shaped by these powerful macro trends. We're seeing a structural supply deficit, right, where global demand has actually outstripped new mine supply for several years running now.
Precisely. This imbalance comes from, stagnant supply on one hand and booming demand on the other. The green energy transition is a massive driver for this. The photovoltaic sector alone, global solar panel installations projected to grow 25% annually through 2030. That's a huge consumer.
And that's just solar panels.
Right. Add EVs, 5G networks, consumer electronics, even AI. They all require vast amounts of silver. This robust industrial demand provides a strong fundamental floor for the silver price. It's not just about monetary value anymore.
The competitive landscape is pretty unique, too, because a lot of the world's silver isn't mined directly, is it?
No, a large portion comes as a byproduct of mining other metals, like copper or zinc. This makes the global supply relatively inelastic to silver prices themselves. If silver price goes up, copper mines don't necessarily produce more silver.
Ah, okay. Which makes pure-play silver producers like Endeavour relatively rare.
Exactly. The big pure play names include Fresnillo, Pan American Silver, Hecla Mining. And there's also a trend of consolidation happening in the sector, which could increase the scarcity value of the remaining independent players like EXK.
But you mentioned challenges, the regulatory environment, especially Mexico.
Yes, that's arguably the most critical challenge right now, particularly in Mexico, where Endeavour has, a significant operational footprint. Sweeping mining law reforms enacted back in May 2023 created considerable uncertainty.
How so? What changed?
Well, things like reduced concession terms down from 50 to 30 years, elimination of first applicant rights for new concessions, so now it's public bidding, and much stricter social and environmental mandates, notably requiring 5% of profits to go to local communities.
And those are being challenged.
They are, yes, in the Mexican Supreme Court.
Right.
So that outcome is still uncertain. You can see why Endeavor's recent acquisition of the Colpa mine in Peru makes sense. It's diversification.
And these challenges seem amplified because it's just so hard to get into this business in the first place, right? The barriers to entry protect the existing players.
Absolutely. Exceptionally high barriers. We're talking massive capital investment, hundreds of millions, sometimes billions of dollars.
And time.
And time. Lead times are incredibly long and risky. Look at Terranera that took 12 years from discovery to its expected full production. Plus, you need highly specialized technical expertise, and you have to navigate these incredibly complex regulatory hurdles.
So these barriers just reinforce that structural supply deficit we talked about, benefiting established producers like Endeavour.
Precisely. And within that tough landscape, Endeavour Silver has built solid brand recognition. They've been listed on both the NYSE and TSX for years, and they're frequently included in major precious metals ETFs. You see them pop up quite a bit.
Okay, but what about their actual costs? You hear a lot about costs in mining.
Right. Their current cost structure is a bit mixed. Their older legacy mines are facing higher per ounce costs as they age, which is natural. But their strategic play is Terranera. That's the key.
Because it's modern, large scale.
Exactly. It's projected to be one of the lowest cost primary silver-producing assets in the entire industry. Once that's operational, it should significantly lower Endeavor's consolidated all-in sustaining costs, that AISC metric, the true cost per ounce.
So Terranera is the cornerstone of their long-term competitive strategy.
Definitely. And I'd argue their most significant competitive advantage lies in their specialized expertise. They have a proven track record in exploring and developing these high-grade, underground silver-gold vein systems, especially in Mexico. It's a niche they know really well. This capability lets them identify and unlock value from underexplored historical districts that maybe others overlook.
Beyond that specific expertise, their growth project portfolio itself seems like a unique asset. You've got Terranera right on the cusp of production.
And Pitarrilla, which is genuinely one of the world's largest undeveloped silver deposits. Together, these provide a visible, tangible path to significant production growth that is really difficult for competitors to replicate quickly.
Okay, that gives us a really solid understanding of their business and where they fit. Now let's move into Chapter 2, Management Evaluation. Because a company's success ultimately hinges on the people steering the ship.
Sure. And the senior leadership team in Endeavour is definitely seasoned. The CEO, Dan Dixon, he stepped into that role in May 2021, but he was actually their CFO for over 15 years before that, helped raise over $300 million for the company during that time. So deep financial roots there.
And the broader team.
Deep operational and development experience across the board, particularly, again, in Mexico. They know the terrain.
Can you give an example of their capabilities? Maybe how they handled a challenge?
Yeah, a great example was that significant equipment failure at their Guanaceví mine back in August 2024. A primary ball mill trunnion failed. That's a critical piece.
Okay, sounds serious. How did they respond?
Management communicated promptly, laid out a clear 15-week timeline for repairs, which they stuck to. And they ingeniously engineered temporary modifications to keep the plant running, albeit at reduced capacity, like 400 to 500 tons per day versus the usual 1,200.
Smart. Kept some production going.
Right. They also managed cash flow, prudently suspended contract miners, focused on processing only the highest grade material. And the plant returned to full capacity on schedule in December 2024.
That really does show strong operational agility and transparent communication under pressure. Looks good.
And they consistently emphasize what they call their clear, timely, and transparent reporting. If you look at their website, it provides comprehensive access to financials, MD&As, that's management discussion and analysis docs, annual reports, technical reports, plus sustainability reports, which they've published for 9 consecutive years now.
And the CEO is visible.
Yeah, Dan Dixon is highly visible.
Yeah.
Regularly hosts earnings calls, participates in media interviews, industry conferences. He's out there.
Okay, let's talk capital allocation. Where are they putting their money?
Their strategy here is unequivocally focused on aggressive growth. They reinvest basically all available capital back into the business. There's no history of returning capital to shareholders through dividends or buybacks.
And that reinvestment goes where? 2 main areas.
Exactly. 2 fronts. Internal development and external acquisitions. Internally, they're pouring money into Terranera, obviously, and advancing Pitarrilla. For 2025, they've also budgeted significant CapEx for their existing mines just to extend their lives, keep those going.
And externally, acquisitions.
Yes. They acquired the Bruner Gold Project in Nevada back in 2021 with $10 million diversifying geographically into the U.S., a stable jurisdiction. And more recently, just in May 2025, they acquired Compañía Minera Colpa in Peru. That was $80 million cash, $65 million in shares.
And what did that add?
It added a 3rd producing mine and is expected to boost production by about 5 million silver equivalent ounces annually. Significant inorganic growth there.
So pulling that together for you, the investor listening, what does this aggressive, growth-focused capital allocation mean? Well, they have a clear policy. No share buybacks and no dividends. Ever, historically. Their shares outstanding have actually increased as they've issued new equity to fund all this growth.
Right. Management's actions clearly signal a strong belief that the potential returns from developing assets like Terranera will create far greater long-term value than any current payouts could. It's a classic growth-oriented strategy, very common among mid-tier miners aiming to become senior producers.
But does that focus on growth come at a cost in terms of current returns? What about ROIC?
Yes, it absolutely impacts their return on invested capital, ROIC. Currently, it stands at just 1.04%.
1%, that's exceptionally low.
It is. Technically, it indicates they are destroying value from the capital they've deployed so far. However, and this is a big however, this absolutely must be viewed in context.
The context being?
They are in their most capital-intensive phase right now, pouring hundreds of millions into Terranera, which hasn't generated a single dollar of revenue yet. The entire investment thesis relies on Terranera becoming fully operational and dramatically boosting the return part of that ROIC calculation.
Driving it well above their cost of capital.
That's the plan. That's the hope. So it's low now, but the bet is it skyrockets later.
That context for the ROIC is really crucial. Okay, let's transition now into Chapter 3, financial analysis. How do all these ambitions, the growth plans, the costs, how does it translate into their financial picture?
Okay, financials. As of July 28, 2025, Endeavour Silver's market capitalization is roughly $1.66 billion. That puts it squarely in the small to mid-cap segment of the market.
And that valuation, $1.66 billion, that reflects more than just current assets, right? There's optimism baked in.
Oh, definitely. It reflects significant market optimism for future growth, especially surrounding the Terranera mine. The market is pricing in future success.
Let's look at revenue. How has that trended?
Revenue over the past 5 years. Well, it's been driven by production volumes and, of course, those volatile metal prices. So it shows an upward but pretty inconsistent trend. It grew from $138 million in 2020 up to $217.6 million in 2024.
Okay, growth there. But
revenue has actually plateaued in the last 3 years. The trailing 12 months ending Q1 2025 was $217.41 million, basically flat.
And that stagnation really underscores how critical those new mines, Terranera and Colpa, are for breaking into the next phase of growth. They need that new production.
Exactly. Now, their profit margins tell a really critical story. The gross margin is 33.80%. That suggests their core mining operations are fundamentally healthy. They can pull the metal out of the ground profitably.
But then,
The operating margin plummets to just 3.85%.
wow, big drop. Why?
That's after you account for corporate overhead and those significant exploration and development costs. Building for the future costs money now. And then the net profit margin is deeply negative at negative 29.06.
Minus 29%.
Yep. Reflecting a net loss. That's largely due to financing costs and also some non-cash derivative losses. This stark difference between gross and net really illustrates the financial burden of their aggressive growth strategy.
And free cash flow. That's the lifeblood, right? What does that look like?
Free cash flow has been consistently and increasingly negative. That's a key point. For the most recent trailing 12 months, they generated about $17.9 million in operating cash flow.
Okay, positive operating cash flow.
But they spent a massive $192.1 million on capital expenditures, mostly Terranera.
Ouch. So the net result?
Negative free cash flow of negative $174.21 million. A huge outflow.
And that substantial outflow directly reflects their laser focus on investment over generating cash right now. It's that growth pattern again, but highlights the financial tightrope they're walking.
Endeavor's earnings are, as you'd expect for a commodities producer, highly inconsistent and cyclical. Big swings between profit and loss. For the trailing 12 months, they reported a net loss of $63.19 million, or negative 0.25 per share. So past earnings are frankly an unreliable predictor of future performance in the short term.
What about their debt levels? How leveraged are they?
Their debt-to-equity ratio at 0.27 is actually relatively conservative for a miner in this phase. Meaning their assets are financed primarily through equity, not debt.
Which explains the share dilution we mentioned.
Exactly. It has led to shareholder dilution, but the flip side is it keeps their balance sheet relatively clean and provides flexibility during this capital-intensive construction phase, less debt pressure, and their short-term liquidity. The current ratio...
Safe are they day-to-day?
The current ratio is 1.14. Now, while that's above 1.0, which technically means more current assets than liabilities...
It's not a huge cushion.
No, it's not a large margin of safety. It really emphasizes the need for very careful cash flow management. Any unexpected disruption, like a project delay, could easily strain their working capital.
And just to reiterate, dividends.
Not applicable here. As we mentioned, the company doesn't pay a dividend, has no history of doing so. For Endeavour Silver, it is truly all about growth.
So, valuation. If they're unprofitable, PE ratio is useless.
Right, because Endeavour Silver is currently unprofitable, its trailing 12-month price-to-earnings PE ratio is quite simply not meaningful, doesn't tell you anything. And comparing them to peers shows a mixed bag. Pan American Silver, Hecla Mining, they have positive PEs. But first, Majestic Silver is also unprofitable currently.
So the market isn't valuing them on current earnings at all?
No. It's valuing them on asset value, their growth profiles, and that leverage to future silver prices. It's a bet on the future.
Okay, so to look beyond the noise of current earnings, you need an intrinsic valuation method, like discounted cash flow, DCF.
Exactly. A DCF model is far more appropriate here. It aims to determine a company's value today by estimating all its future cash generation and then discounting it back to the present, accounting for time and risk.
But it's complex for a mining company, I imagine.
Very complex. Requires projecting production volumes, volatile metal prices, operating costs, capital costs, all far into the future. Lots of assumptions. And a credible DCF model for Endeavour Silver hinges heavily on those key assumptions.
What are the growth rate?
Yes. For the growth rate, you'd have to model very high front-loaded growth from Terranera and Kolpa coming online. Then maybe taper to a more conservative terminal growth rate, perhaps 2.0% to 3.0% long-term.
And the discount rate, the WACC, that needs to reflect the risk, right?
Absolutely critical. The discount rate, or weighted average cost of capital, WACC, has to capture the substantial risks, commodity price risk, operational risk, and especially the jurisdictional risk with operations in Latin America. An appropriate WACC would likely be in the range of 9.0% to 10.0%, maybe even higher depending on your risk assessment.
So if you run those numbers, based on those types of reasonable, publicly available assumptions, and crucially, assuming a successful ramp-up of Terranera, plus long-term silver prices maybe in the 28-32 LAR per ounce range.
Then an educational DCF model suggests an intrinsic value for Endeavour Silver somewhere in the range of $6 to $8.50 per share.
But you have to remember, this isn't a price target, and that final value is extremely sensitive to all those inputs, especially silver price and execution. It really highlights that gamble aspect we keep mentioning. All right, With the financials laid bare, let's dive into part 2, starting with chapter 4, market sentiment for Endeavour Silver. What's the broader market saying about this company? How is it perceived?
Well, the sentiment among Wall Street analysts covering Endeavour Silver is actually overwhelmingly positive. The consensus rating is currently a strong buy.
Strong buy. So most analysts are bullish.
Very bullish. It reflects a significant majority rating the stock as buy or strong buy, with very few hold ratings and notably 0 sell ratings on record right now.
And does that bullishness show up in their price targets?
It does. The average 12-month price target for EXK is approximately $8.33. The forecasts range a bit, from about $6.25 on the low end up to $10 on the high end.
So compared to the current share price around $5.70, that average target implies what? Potential upside of over 45%?
Exactly. It signals a strong belief among analysts in the stock's future prospects, likely tied to Terranera coming online. Now, recent news coverage presents a more multifaceted tone, which really reflects the company's transitional phase. It's not all roses. For instance, Q2 2025 production results, released in early July, were described in reports as a mixed bag.
Mixed how?
Positive initial contribution from the newly acquired Colpa mine, which is good news. But they also noted operational headwinds and, importantly, declining production at their legacy Mexican mines. So, challenges remain.
What other recent news has moved the needle?
Another major item was the July 10th announcement of their intent to raise up to $60 million through an at-the-market equity offering, an ATM program.
Ah, selling more shares. That usually puts pressure on the price, right? Dilution concerns?
As expected, yes. It led to some short-term selling pressure due to that potential shareholder dilution. So overall, the media acknowledges the long-term growth potential of the Terranera story, but remains watchful of these near-term execution risks and the ongoing financial pressures. It's like the market is saying, we see the masterstroke potential, but show us the money, show us the execution. And one indicator that really captures that tension is the high level of short interest.
Short interest, people betting against the stock.
Exactly. It stands at 10.92% of the stock's float, which is quite substantial. It suggests a significant part of the market is actively betting the price will decline. Maybe they're skeptical about the execution of Terranera or concerned about the valuation given the current unprofitability and high cash burn.
So it creates a polarized environment.
Definitely. Where significant news, good or bad, could lead to really outsized price movements. Potential for volatility is high.
Okay, so analyst optimism, mixed news flow, high short interest. What about the technical picture? How does the chart look?
Technically, the stock is actually showing some strength right now. The 50-day moving average is around $4.76. And with the current share price at $5.70, the stock is trading comfortably above that short-term trend line. That indicates positive momentum.
And the longer-term trend, the 200-day.
Even more bullish on that front. The 200-day moving average, which is a critical long-term indicator, is sitting around $4.25. The fact that the stock is trading substantially above both its 50-day and 200-day moving averages is generally considered a strong technical signal.
And that aligns with the positive narrative around Terranera finally coming online and the underlying strength in silver prices recently.
Exactly. The technicals seem to be confirming the bullish story for now.
So we've got bullish analysts, significant short interest creating tension, but strong technicals. Interesting mix. Let's move to chapter 5, ownership structure. Who actually owns Endeavour Silver? Who are the key stakeholders?
Well, institutional investors hold a pretty significant stake. They own approximately 49.94% of Endeavour Silver's outstanding shares, almost half the company.
And who are these institutions, specific types?
Yes, this ownership base is really dominated by specialized precious metals funds, and very notably by large exchange-traded funds ETFs. Think Van Eck Associates like GDX, GDXJ, Amplify, SILJ, Global X, SIL, those kinds of funds.
Yeah, okay, and that ETF ownership is a crucial point for you, the listener, right? What does it imply?
It implies that a large portion of the buying and selling of EXK shares isn't necessarily driven by active fundamental analysis of Endeavour Silver itself. It's often driven by broader investor sentiment towards the entire precious metals mining sector.
So if money flows into those big silver miner ETFs,
they are obligated to buy EXK shares according to their index weighting, regardless of Endeavor's specific situation that day. It tightly links the stock's performance to its sector, creating correlation.
Okay, nearly 50% institutional. What about insiders? Management directors?
That's a stark contrast. Insider holdings are actually very low. Executives and directors collectively own only about 0.185% of outstanding shares.
Less than a fifth of 1%. That seems really low.
It is quite low. And that can be a concern for investors who prefer to see Management's financial interests, their skin in the game, closely aligned with shareholders. It raises that alignment question.
Have insiders been buying or selling recently? Any signals there?
Recent insider transactions show a mixed, but I would say telling, picture. Overall, insiders have sold significantly more shares than they have purchased over the past year.
Any specific examples?
Most notably, CEO Dan Dixon sold 250,000 shares back in April 2025 for roughly 1.35 million Canadian dollars. Now, there were some smaller opportunistic buys by other insiders around the same time, but the net selling, especially from the CEO, is certainly a data point that warrants careful consideration when you're weighing that potential versus the risk.
And how concentrated is the ownership overall?
Ownership is moderately concentrated. The top 25 institutional shareholders own 33.53% of the company. But as we noted, the dominance of those passive ETFs means their influence is often exercised more through index inclusion rules rather than active engagement with management.
So the remaining ownership.
It's split between smaller institutions and a large base of retail investors, making up approximately 60% of the ownership. And that large retail base can contribute to stock volatility as well.
All right, now for the part everyone needs to pay close attention to. Time to face the music with Chapter 6, Risk Assessment. Let's break down the SWOT.
Okay, SWOT analysis. Endeavor's core strengths, as we've discussed, include its deep, specialized expertise in those high-grade, underground silver-gold vein systems, particularly in Mexico. That's honed over 2 decades. This is complemented by a strong project pipeline, Terronera coming online, Pitarrilla for the future providing a clear path to growth. And its business model inherently offers investors high leverage to the price of silver. If silver moves, EXK should move significantly.
Okay, those are the strengths. On the flip side, the weaknesses. These seem significant and really speak to that gamble narrative.
They are significant. The company is burning cash at a high rate, as shown by that deeply negative free cash flow. This is exacerbated by its reliance on issuing new shares to fund growth, leading to significant dilution for existing shareholders. Your slice of the pie gets smaller.
And operationally?
Operationally, their 2 legacy mines are mature. They face declining production profiles and rising costs, offering little financial cushion if Terronera faces delays.
And that insider ownership point again.
And yes, that very low insider ownership could be perceived as a weakness in terms of management alignment with shareholder interests. Now, for opportunities, Endeavour is certainly well positioned to capitalize on that structural silver supply deficit we talked about. Demand is surging from renewables, EVs, tech.
A rising tide for silver could lift their boat significantly.
Exactly. Also, its high short interest, while a risk indicator, also presents an opportunity for a potential short squeeze if genuinely positive news emerges, like a smooth Terronera ramp-up. That could force shorts to cover, driving the price up rapidly. And finally, ongoing consolidation in the mining sector could see them either acquire more distressed assets cheaply or perhaps become an acquisition target themselves for a larger player wanting their growth profile.
But the threats, these seem formidable and need careful consideration.
Absolutely formidable. First and foremost, the inherent volatility of silver and gold prices. It's a commodity producer after all. A significant downturn in metal prices would severely impact their revenue and profitability, especially before Terronera's lower costs kick in.
And the jurisdictional risk.
That's number 2, and it's substantial. The regulatory and political risk from their heavy concentration in Mexico. Those 2023 mining law reforms have created real uncertainty that could impair the long-term value of their core assets there. That's a major overhang.
And finally, operational risks.
Operational risks, specifically around Terronera. Any costly delays or budget overruns at that critical project loom large. They need that project to work on time and on budget. Otherwise, they could face serious financial strain, likely forcing more dilutive financing. This really highlights the high-stakes nature of their current strategy. Macroeconomic factors also present a complex, double-edged threat. Take inflation.
Good for silver prices, maybe, as a store of value?
Potentially, yes. But inflation directly impacts the company's cost structure. It increases prices for labor, energy equipment, everything squeezing their profit margins. Management has explicitly identified this as a key operational challenge they're battling.
And interest rates, how do they play into this?
Interest rates have a significant influence, usually inverse to precious metals. Higher rates increase the yield on competing safe haven assets like government bonds. This raises the opportunity cost of holding non-yielding silver, which can put downward pressure on its price.
But
conversely, a shift towards lower interest rates, perhaps if economies slow down, would likely be a major catalyst for higher silver prices. directly benefiting Endeavor's revenue and potentially its stock price. And thinking about specific geopolitical factors, say the imposition of broad new tariffs by the U.S. in 2025, as has been discussed, how might that impact things?
Yeah, how does that ripple through?
It introduces another layer of risk and uncertainty. If tariffs triggered a global economic slowdown, industrial demand for silver could weaken, which is bad for Endeavor.
But there's another side to that coin.
Yes, such a move would also likely increase geopolitical tensions and financial market volatility. In that scenario, silver's role as a safe haven or chaos hedge could lead to strong investment demand, potentially offsetting or even outweighing the industrial demand decline.
So the net effect is hard to predict.
Very difficult to predict, but it would almost certainly lead to higher volatility in silver prices and consequently for Endeavor's stock.
Okay, we've covered a lot of ground. We've reached our final section, Chapter 7, conclusion. Let's try to bring all these threads together.
Right. Synthesizing all this. The bull case for Endeavor Silver really rests on three core pillars, I think. First, that powerful macroeconomic tailwind. The structural silver deficit driven by surging demand from green energy and technology. That's a strong backdrop. Second, the company's own transformational growth profile. Terronera is expected to nearly double production and dramatically lower costs. If that happens, it could lead to an explosion in profitability and cash flow. And third, the longer-term potential of the Pitarrilla project. That's a world-class, undeveloped silver deposit, offering blue sky potential down the road.
Okay, that's the bull case. It sounds compelling, but the bear case seems equally compelling, rooted in those significant execution and jurisdictional risks we discussed.
Absolutely. The bear case highlights the company's almost complete dependence on the flawless, on-time, on-budget commissioning of Terronera. That's the primary execution risk. Any delays or overruns could force highly dilutive financing at potentially unfavorable terms.
And Mexico.
And the heavy concentration in Mexico, coupled with those restrictive mining law changes, creates a deeply uncertain legal and political environment that could genuinely impair asset value long-term. That's a major jurisdictional risk. Finally, the company's current unprofitability and its history of diluting shareholders mean investors today are truly paying for future promises without a guarantee they'll be fulfilled. So, recapping valuation. Traditional metrics like PE are unusable right now due to unprofitability. An intrinsic valuation approach, like that DCF model, is more appropriate. But again, it's highly dependent on long-term assumptions about commodity prices and, crucially, execution.
And that educational DCF model suggested a range of...
Based on reasonable, publicly available assumptions, it suggested an intrinsic value range of roughly $6 to $8.50 per share.
So bringing it all together, Endeavor Silver clearly presents a classic high-risk, high-reward scenario for investors. The potential upside is substantial if management successfully executes its ambitious growth plan, and they do it within a strong silver market environment.
But the operational risks, Terronera execution, the financial risks, cash burn, potential dilution, and the political risks, Mexico, are equally significant and absolutely should not be underestimated. And looking at its current share price, around $5.70, it trades just below the low end of our educational intrinsic value range.
What does that suggest?
It suggests the market is pricing in considerable risk. It isn't yet fully crediting the company for the successful on-time and on-budget delivery of Terronera. The market is saying, prove it.
So an investment today.
An investment in Endeavor Silver today is really a calculated bet. It's a bet on management's ability to navigate these substantial risks and unlock the potential of their assets, particularly Terronera. The outcome will likely hinge ultimately on two critical factors. Number one, the execution of the Terronera ramp-up, and number two, the future direction of the silver price itself.
So Endeavor Silver is clearly at a pivotal moment, a real inflection point. The question for you, as an investor, is how will this green energy transition truly reshape the future of commodity investing, and will Endeavor emerge as one of the winners? What stands out to you about Endeavor Silver's ambitious, high-stakes bet on a silver-hungry world? If you found this deep dive valuable, please consider liking and subscribing to Stock Analytics AI on YouTube. It really helps us out.
And remember, Stock Analytics AI members get priority deep dives on specific tickers for just €4.99 a month. Plus, we're covering all of the S&P 500 stocks over the next few months, and members get exclusive priority access.
For a one-off deep dive request on a stock you're interested in, just drop us a super thanks on YouTube. And one final, very important note. This analysis was generated by an AI system using publicly available data. It is intended for educational purposes only and should absolutely not be considered financial advice. Please always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions. Thanks for joining us for the deep dive. We hope you feel a little more well-informed and maybe ready for your next aha moment in the markets. We'll catch you next time.